The second quarter of the year is underway, and we're looking at the performance of ETFs so far. The cash pouring into these funds in Q1 standing at right around $80 billion. That's according to the latest data out from VettaFi. Well, let's break down where investors have put their money and where they should going forward. For that, we want to bring in Todd Rosenbluth, VettaFi Head of Research, in this week's ETF report brought to you by Invesco QQQ. Todd, it's great to have you back here in studio. So let's talk about two areas that investors were favoring, where they put their money into during the first quarter. What was that?
Yeah, the largest chunk of money went into fixed income ETFs. Almost 2/3 of the overall inflows went into this category. Now, there was a flight to safety overall, concerns about where the interest rates were going and where the Fed was going to act next. And so fixed income ETFs were a nice safe haven for many investors. The other area that we saw interest in was also with international equities. So we've had a long home bias for U.S. investors. To start the year, we saw stronger interest in international equity ETFs. Almost $30 billion overall flowed into that overall category. And we saw both a combination of developed international investment interest in Europe in particular and emerging markets. So strong interest overall.
Given the current dynamics, is that still a wise plan moving forward?
Well, what we've seen at VettaFi, when we look at some of the data that's come out, we're seeing sentiment shift towards U.S. equities and away from international equities. We're starting to see investors get a little more confidence in the U.S. equity exposure overall. They're looking to rotate. But the big gainer that we saw in international equities was BBEU. This is a JP Morgan Europe ETF, low cost, 9 basis points for the fee. Really strong interest overall in developed international companies like Nestle leading the list. Exactly the high quality companies that you'd expect. And within fixed income, one of the ones worth highlighting is USFR. This is a Wisdom Tree floating rate treasury ETF. For investors that are concerned about the rising rate environment and looking for a flight to quality, you get 5% yield with this Wisdom Tree ETF, and we're really starting to see investors see that as a safe haven where you can get stable income while you try to figure out what's next within the fixed income world.
So, Todd, these are outperformers in Q1 just in terms of attracting money. It sounds like you think that trend is going to then continue, at least for the current quarter right now.
We do. We're starting to see a rotation into U.S. equities. I think we obviously saw a much stronger March from a performance standpoint. And we saw outflows for U.S. equity ETFs in the first quarter of the year. That doesn't happen too often, especially when the market, the S&P 500, is up over 7%. But what we did see was a flight to quality within the equity space. So an ETF like QUAL, which is an iShares ETF, was actually the number one net inflow gainer. Overall, QUAL holds high-quality companies, strong balance sheets, stable earning streams, return on investment being a focus for them, and it's performed well. It actually outperformed the broader S&P 500 in the first quarter of the year as investors looked for a relatively safe haven within the equity space.
And IAU, tell us about that.
Yeah, so gold ETFs in particular were out of favor. Commodity ETFs in general and gold ETFs in particular. And that's a bit surprising. We would have seen money go into gold as a safe haven. That's the theme I've been talking about today. But we haven't seen that. Investors are looking for other alternatives. So that's a bit of a concern to us that maybe they've shifted away from gold. They've gone to managed futures products. They've gone to alternatives. Obviously, crypto has been a much stronger performer than gold this year.
What do you make of that?
I think it's a bounce back from the really poor performance that we saw in 2022. But there has been interest. We've seen a renewed interest in crypto ETFs, in the underlying ETFs of BITO, the ProShares ETF, but as well as the equity-related products that are tied to crypto. So more than gold in particular, and that's a bit surprising in this environment.
Sure.
Todd, what about oil? Because just on the heels of the news yesterday, OPEC Plus cutting production further. Obviously, we saw a pop in crude, and a number of the larger U.S. oil players also rose yesterday. What's the investment play there, do you think?
So the way that we're thinking is an opportunity is an ETF AMLP. So the MLPs, the midstream companies, they make money whether oil is rising or falling. These companies have been buying back their stock. They've been raising their dividend over the years. It's actually been a stronger performer than the broader energy sector this year and investing in oil because, to come back to it, it is, again, a safe haven within that energy space. So AMLP is an ETF worth paying attention to within the energy sector.
All right.
All right, Todd Rosenbluth, great to have you. Thanks so much for joining us here on Set.